is the earnings report. So you had the quarter three earnings report that was revealed yesterday. As when we're recording this, it was today. But when you're hearing this, it was yesterday. And as was kind of predicted, the domestic parks didn't do very well. And we kind of knew that. Comcast had their quarter three earnings report a few weeks ago, and they had reported that their domestic parks were about down 10 to 11%. Yeah. So we kind of assumed going forward that Disney would see something, similar here.
Yeah. So the experiences division, which is theme parks, cruise lines, and consumer products, was up 2% in revenue, but down 3% in operating income. Domestic parks specifically was down 6% compared to last year. This was due to higher costs driven by inflation, increased technology spending, and new guest offerings, and partially offset by the comparison to depreciation in the prior year quarter related to the closure of the Galactic Star Cruiser and cost-saving initiatives and guest spending growth attributable to increases in per capita guest spending at our cruise line and theme parks and higher per room spending at our resorts.
If you ever expect Disney just to say we were down a quarter, they won't. They're going to give you word salad on a level you've never seen, and they give you a bunch of... The other thing they used, the terminology was moderation in demand.
Moderation demand. That was just basically lower crowds.
That just means lower crowds, but they don't want to use the term lower crowds. So they'll say moderation, and people ask, certain things, but
moderation demand is what they said. Yeah.
That was, I've never heard that term before, but they used it in this.
They did. So from Disney, it says at our experiences segment, we expect that the demand moderation, there it is, we saw in our domestic businesses in quarter three could impact the next few quarters. While we are actively monitoring attendance and guest spending and aggressively managing our cost base, we expect quarter four experiences segment operating income to decline by mid-single digits versus the prior year, reflecting these underlying dynamics as well as impacts at Disneyland Paris from a reduction in normal consumer travel due to the Olympics and some cyclical softening in China.
Okay, there's a couple of things in there that are interesting. First off, I don't understand how the Olympics affects Disneyland Paris.
So people aren't going as much because of the Olympics? I would think they would go more.
Right. You would assume if there's more travel for the Olympics that people would also travel to theme parks. So I don't know. I'm not going to claim to be a Paris travel expert. That part I thought was weird. But the thing in there that I thought was interesting was not only is this quarter down, but they're saying, quarters going forward. Basically, things are looking weaker going into 2025, which isn't unexpected. Which goes into, obviously, a lot of this is the economy. It would be dishonest to say otherwise. But I'm wondering, and I've had this theory, and I will find out less than a year if I'm right. Well, I guess maybe close to a year if I'm right on this. I really do think Epic Universe is driving, not only, we figured Universal would see a downtick in their attendance given they have a brand new theme park opening in less than a year. Logic would say, especially with the economy being down, you want to get the most out of your money. If you're going to go on this trip to Universal, why not wait until a new park is open? I actually think this is also affecting Disney because I think, it's affecting all of Orlando. All of Orlando travels down. But I think there's a lot of people that are just waiting for Epic Universe, and this is also now affecting Disney as well because they're saying, we're just going to hold off on all trips until that is open. No way to prove that right now. It's just a theory I have, but I do think that is part of this that is going on. But we'll have to wait and see, once it opens and stuff.
And the CFO said that lower demand for their domestic theme parks is due to lower income consumers feeling financial stress and higher income consumers traveling internationally. So, okay. I mean, yes. I mean, it is expensive to go to the parks, and if you're coming from a lower tax bracket or whatever, you probably aren't going to be spending as much money on vacations. When the economy is not so great and money's tight, vacations have to go. Especially
whenever Disney has been making it increasingly more expensive to go.
Absolutely.
Yeah.
And the higher income consumers traveling internationally, I mean, maybe, but wouldn't they go to Disney World also?
Yeah, and not only that, I think he says international, but also cruise lines. I mean, people are cruising a lot more versus going to theme parks. But I think the other thing, and we've talked about this a little bit, is, Disney keeps going, more and more expensive. So going after that upper tier of customer. The thing is, when you're paying that much money for vacations and trips, there's also a certain level of service you're expecting at that price point. And we've heard a lot of people have talked about how people haven't been happy in terms of like spending all this money and the service they're getting versus going overseas. And there's a lot of people talk about going overseas and spending as much or even less than they would have spent on a Disney vacation and going to Europe for 2 weeks or whatever. So I think when Disney going after this higher, this I guess you would just call it more affluent market, it's much more competitive for that money because there's a lot that money can go a lot more or just the same amount in other places. Like you can go world travel, you can go on these cruises, you can do other things, or you can go to a theme park. And I think that they'll never come out and say it. I wonder how much they're thinking of like, well, maybe we shouldn't have gone that aggressively on the high end because you're entering into a realm you've never tried to compete before. Because usually I think theme parks for the most part have been, middle class. Now they're trying to get into the upper class echelon of things. And not that upper class people didn't go, but at the same time, that's a whole other sphere of travel versus, I think, traditionally what Disney's been sort of competing with.
Yeah. And on the other hand, I do want to point this out, Disney did show a 29% increase in operating income compared to the same quarter in 2019. So this is pre-COVID. Attributing this to date-based tickets. Date-based tickets were like a fairly new thing back then. Genie Plus since then.
I was going to say most of that is going to be Genie Plus.
The reservation system, mobile ordering, promotions and discounts, and annual pass holders. And they said, quote, "We are fortunate to have an incredible community of annual pass holders and Magic Key holders over in Disneyland, many of whom are our most loyal fans." Yeah. Yeah. Seeing as how your parks are not busy when there are big blockout dates for annual pass holders.
Yeah.
That right there should tell you something. That your parks, yes, there's a lot of people that come from out of town that are not pass holders that will be at your parks, but you need to treat your annual pass holders well. Like they keep you going.
Which I'm sure this coming little period they will, because they kind of tend to lean on the annual pass holders whenever things are down. Now, out of all the things they listed, I don't see how the park reservation system has anything to do with revenue. I just don't. Mobile ordering, I don't see how that would spike revenue. I think the thing you're just looking at, it's Genie Plus / Lightning Lane. That's the main difference between 2019 and now is that system that was free is now being charged for, and that is a huge revenue maker for them.
Yeah, for sure. Something to keep in mind, though, when we're talking about like into 2025, they're talking about fiscal 2025. So like when they say the next couple of quarters, they mean halfway through fiscal year 2025. Yeah. Which would be, early spring. So that's what they're saying, like the attendance records or the attendance and the operating income is going to be affected by that going into 2025 and a little bit farther. And who knows? I mean, it may go up from there once Epic Universe opens, and they're thinking people are going to go to Epic Universe and they'll also come to Disney. I don't know.
See, I don't know. If you listen to their wording, and again, Iger has reiterated that they're not worried about Epic Universe. I think they expect to see a bump from it. And I'm not saying that they won't see a bump, but I think what Disney's expecting is the same thing that happened back when the Wizarding World first opened for Universal. So if you remember back then, Universal saw about a 35% increase in their attendance. Disney also saw a bump, but that was also back, and Universal still, at this point, is traditionally been an add-on trip when it comes to, people go for Disney World and they add on a Universal trip. What Universal is trying to do, and I think what a lot of people may be doing, is that maybe flip-flopping, where people are coming down for Universal, for Epic Universe, and now there's 3 parks, it takes about 3 to 4 days to do all that, and they add on a Disney trip, which they would probably add on like Magic Kingdom. But the park that's going to get hit the most probably is Animal Kingdom.
I was going to mention that, yeah.
So I'm curious as to when we get an opening timeline for Epic Universe and we start seeing bookings, because Comcast is going to report bookings once that's the thing. What do Disney's bookings look like? I think that'll tell you a pretty decent picture about what that's looking like. And then from that point, I mean, even before then, I think Disney's probably going to run some pretty aggressive discounts to try. They're not going to have any. I mean, I think what they're going to use to combat or try and combat Epic Universe on some level is probably what they did back then as well, which is probably shows and parades. And we'll talk about more in D23 what they may do, but I think they'll do that, run aggressive discounts, assuming also we're going to get a bump. And so Disney could get a bump. I just don't think they're going to get a bump anywhere near what Universal will. But we'll have to wait and see how that shakes out on there. But I think that's their thinking in this is we don't have anything in the short term to combat this. We're going to get a bump from this too. You know, in terms of how much they get, I guess it's just it's a little bit of a gamble, I think, on some level. But